All right. So we're going to be looking at break structures and change characters. So the general idea is that the highs being broken is a break structure. Yeah, these are break structures. And then they always leave out like a little demand zone that gets mitigated. So break structure here, comes down, mitigates demand, and goes up, right? That's the general idea. So it would be something like during an uptrend. Let me get back here. Let's say over here. This is a break structure because this high gets wiped out. Let's create a structural break over here. This high gets wiped, so that's a break structure. And this high gets wiped out, break structure. Do you guys understand that? Or?
Yeah, okay. It's simple. It's not hard. I mean,
yeah. So
the problem is
this is the general idea. Yeah.
Yeah.
You guys know that this is every single high that gets broken is a break structure. Break structure. This, however, let's say something like that. Yeah. This is all a break structure. So there's break structure here, and then a break structure here, right? Let's mark that out as break structure. And break structure. Now you want to get the range here. So the range of this high, the range of this zone here, yeah, this break structure zone. If anything in this low gets broken, then it's a change character. So it would be something like this, right? If this low gets swiped out, then it's a change character here. This would be a structural break, but you switch it to a change character, and then you turn this into a change character too. So if a high gets broken, and then the low within the high gets broken, it's a change character.
Yeah, and the high is protected.
Yeah, so this would be protected high. So that's the same thing as this one here. If you see how this is a break structure, if this break structure, yeah, in this range, if that low gets taken out, then it's a change character. So if price decided to instead go down here, yeah, then this whole range would be a change character, and then this high here would be a protected high.
Yeah.
So if we look at real examples, zoom out. Like here. So let's just use this. This is a break structure, right? That's a break structure. Wait, let's just like forget everything.
Weak.
No, forget everything here. Forget everything here. In the low time frame, it should be a close.
I mean, personally, I would take as
see? You see how like in the low time frame it's a close, it's a body close.
Yeah. Okay.
So I'll just show you the 15 minutes because it makes sense on the 15 minutes. You would have seen it easier. So let's just go back to 15. So forget everything back here. None of that stuff matters. So I'm gonna mark this out. Everything here. Let's make that really hard to see. So none of that matters, right? Let's just pretend none of that matters. We saw that a structure broke here, and then within that range, which is everything here, right? Everything in that range, the lowest point in this range is, if that gets wiped out, then it's a change character. If the lowest point here gets wiped out, it's a change character. So the low here gets wiped. So that's a break structure to the downside, right? So when you see two break structures, then it's a change character. I'll show you a better example in the let's go here. 1 minute. Could be here. This is a break structure to the upside, right? Break structure to the upside.
Yeah.
And then as soon as the lowest point inside this range gets taken out, then it's a change character. So if we're looking at these 1, 2, 3, 4, 5, 6, 7 candles, the lowest point is here, right? And then this is the protected low until it got broken. So when there's a break structure to the downside, that is now a change character. So you would make these two a change character, because that's how you know that there's a trend reversal. When a high gets taken out and then a low gets taken out, then it's a change character. That's only change character to the downside. Do you guys understand? Or
Okay. I mean, personally, yeah, but my question is, if there is a change of character, there should be a pullback to a supply or a demand, right? In your case, it doesn't mitigate any supply.
yeah, but I
If
haven't
you
added
if you
I
look
haven't
in,
added a supply and demand yet. I'm just showing you the general idea of structure. You're not gonna learn
okay.
structure, supply and demand all in one little course, but it takes like hours and hours. But that's what I
But
would
this
find.
is what makes a CHOCH valid. This is what makes a CHOCH valid.
No, that's what makes a strategy valid. A chalk. This I'm teaching you guys a chalk, but a strategy is different.
Mm-hmm.
Wait, it's like I'll tell you. It's like this. This is the general idea of a chalk, right? This doesn't have to be a body close. This doesn't have to be a body close at all because it's just a sweep of liquidity. So that's why I write sweeps. Yeah, it sweeps liquidity to the upside and then it sweeps liquidity to the downside. That's what I mean in change character. So this needs to be a body close, but over here I don't consider any body closes.
Mm-hmm.
Wait, what happened here? Oh yeah, this could be chalk here. Over here, yeah, chalk. This swept the low, and then within this the highest point here, yeah, there's a change character here, because it swept the low and then swept the high, right? And then
Yeah.
there's a break structure here as well. So now we're clearly bullish, right? And then you need to find a demand zone in here to go long. So you mark out the order block or the demand zone here. You see how it
Holy shit.
retests and it goes up?
Uh,
That's how you add the CHOCH plus BOS strategy. But you didn't need to learn this yet. You don't worry about supply and demand yet until you learn proper structure, which is this supply it's not supply, CHOCS and sweeps, CHOCS and break structures.
yeah, but I think a lot of people know like this theoretical part, but their problem is, when they practice on the charts, because I
Alright.
know perfectly about this CHOCH and breakout structure.
Okay, so I'm looking at Ogle's. Can you guys see my screen?
Yeah.
So this is right. This is a chalk, but you're drawing this chalk in a terms of support and resistance. So after this high gets wiped out, and then this low gets wiped, right? That is a chalk, but you would want to look for a supply zone here. You don't want to take a trade here because that's just support and resistance. After any mitigation, nothing's valid anymore. So it's the same as this demand zone, yeah? You see how this demand zone missed? And then this is called inducement. There's a lot of early buyers and sellers here. So let's just call this inducement. This is inducement, right? Early buyers and sellers because they think that, oh, price reacted off this imbalance. Yeah? This is how you chop smart money traders. Price reacted off this imbalance and therefore it went up. But we know that this is just inducement, early buyers and sellers, where the real move is down here, where we took the entries. And all the smart money traders, they got stopped out at break even.
Mm-hmm.
Do you guys understand the CHOCS or
Personally, yeah, I think Algo
do you
has
guys do
problems.
you guys have any more questions? Like try marking out and then show me and then I'll look at it.
I have a question about inducement, and my question is, how far is it? I mean, wait, let me draw to you.
Yeah, just show
It's
me.
a bit hard to explain.
That's fine. A good exercise for you guys is just to keep marking out break structures, and then see a trend reversal. Like just keep marking out structure. Don't worry about too hard about supply and demand. I'll run a class on supply and demand maybe next week, and I'll teach you guys how I make these entries. I'll also teach point of interest selections, because a lot of people they're choosing like zones are here. Yeah, they choose zones here, they choose zones here to go long, they choose zones here, and they're just getting stopped out. And then I'll show you guys how I choose my zones.
Wait, Eddie, can I share my screen?
Yeah,
Because it's a
sure.
bit difficult to,
Yeah,
for you to.
yeah, that's fine. Yeah, show me.
Right. This is the demand zone, and this is
Yeah.
basically where the price touched the demand zone. So
Yeah.
my question is, I know inducement that is this one,
Yeah.
100%, and it's also this one. Oh, sorry.
Yeah.
It's also this one. My question is, if this is also inducement, or if this is also inducement. Right. I know this is not inducement, and I know this
No,
is not
so
inducement, or might not be inducement.
so you see the point that was closest to touching demand? Yeah, that's inducement.
Yeah.
But all the everything else is just basic order flow. So it's reacting off all those little supply zones and demand zones in internal structure. So you would like primarily call them liquidity. So wait,
Okay.
I'll show you my screen. So um you know how it's like, let's say we're talking about this zone here, right? This demand zone. Can you guys see my screen?
Yeah.
Okay. Wait, hold on. Structure break here. Structure. Oops. Structure. Fellow demand zone. Oh, perfect. Okay. You see how this is close to tapping, but it misses? Yeah? This is
Yeah.
inducement because like these are all the early buyers and sellers. They're thinking that this is a proper demand zone. Yeah, that's what they're seeing. Which, yeah, they could have made money here, but the real move was down here. Yeah? Now, all this stuff here that you marked out, like, you see how you marked out this before? Yeah?
Yeah.
That's not really inducement. It's just liquidity.
Liquidity,
Yeah,
right?
it's like a liquidity build up. So like they're building a lot of longs for people to get stopped out.
Okay.
Because if you think about closely, right? Let's go to wait, I'll replay mid this around here. Alright. So you see how this is a valid demand? Yeah, we could have just looked for let's go 1 minute. I'll show you the order flow. Uh Stodgy, choke, choke. What's price reacting off? Price is reacting off all these little imbalances, which I wouldn't take the trade on. I'm just letting you know I wouldn't take trade, but we're just looking at what price reacting off here. Like price reacting off here. So this little unmitigated wick. So price reacting off,
Yeah.
and then price is also reacting off this newly unmitigated wick. Uh, refined. Okay. And then price here is reacting off this unmitigated wick. So we're looking at order flow. We're just seeing that because we're chasing this demand zone, right? Because we're chasing this demand zone, the order flow internal structure, we would be looking for shorts into that zone. So everyone else who's longing, which is like people here, they're long in the market. They're just liquidity build up for them to get stopped out, and then we make the longs. Yeah, I wouldn't trade this. This is I think this is spread hours. I wouldn't really use these zones.
Yeah, December. Yeah.
Yeah, these were like really bad spread hours or holiday, I think. But you wouldn't want to take these trades. In This is a bad example because of it's December. Yeah, it's bad price action, but that's the general idea on how you trade order flow. But you guys shouldn't worry about order flow too heavily now. Just focus on structure for now. Order flow is a very complex topic. Wait, let me check.
I mean, in definition, it's simple. It's like, it's self-explanatory. It's like where the orders flow.
Yeah,
If there is a bearish order flow, there are gonna be more sells.
not because what I mean is like, like let's say we have bullish structure, right? Let's say this is structure up like that. Something like that. Oh wait, actually, I have a better example. Pretend this is the 4 hours, yeah. Pretend this is the 4 hours.
Yeah.
Let's say you guys know that this is okay. This is a break structure. Break structure, right? Break structure. And
Yeah.
then it left out this little demand zone here, right? Now, we on the 4 hours, we're waiting for price to go down here, right? We're waiting for the 4 hours to go down here on the 4 hours. But while we're waiting, right? If you zoom in into the 15 minutes, the 3 minutes, the 1 minute, you can look for shorts into the zone. If price has previously reacted off a little supply zone here, like an internal supply zone, not a major one. So it could be like this. Something like that, right? And then you know how like this here is a change character. Yeah? You guys know this is a change character, just like we talked about, right? Change character, change character. So when this happened, when I'm bullish, right? And then let's just say that this there was a demand zone here that price tapped into, and then now we're looking for a long here, right? On the 4 hours. Generally, people will look for shorts here. They look for shorts here. They look for shorts here. And these are all weak zones. They're not going to hold because when price shift bullish, all these zones are weak. But if you're looking at order flow, right, you can see that price can react off here and you can go for shorts into this demand zone. So for order flow trading, you look for the supply zone and you go straight to the demand zone. So even though we're bullish on the 4 hours, we can still look for shorts in the low time frame. Do you guys get it?
Yeah, basically have to connect the higher time frame with the lower time frame.
Yeah. So instead of
Orderflow.
waiting for price to go down, we can just look for shorts in a supply zone into a valid demand zone that's strong.
I actually have a very good picture of that. I can send you.
Yeah, send it through.
Wait, where should I send it?
You send it my
Trading
DM.
ideas? Okay.
Yeah. Oh wait, yeah, wait. Are you in premium?
Yes.
Oh, okay, yeah. Just send it in Forex trading ideas. Yeah.
Okay. Because it's like a multi-time frame. You see it right now.
Wait. Oh.
It's very good. Is it this one? Yeah, it's this one.
Is this mid time frame market structure?
Multi-time frame.
Yeah, this is a really good video.
You see like the white one 4 hour, the
Yeah.
blue one 15 minute, and
Yeah.
the orange one 1 minute.
Yeah. This type of structure is just order flow. So
yeah,
it's like it's structure, but you need to factor in all the supply and demand zones because the market is based off supply and demand, and that's why after supply reaction you wouldn't just jump straight to longs. 'Cause a lot of people get stopped out.
and you see these dots on the 4 hour. He also marked the swing structure.
Which yeah, I see that. Yeah. That's the 4 hour breaking structure, right? Yeah, I see it. Yeah, that's what I was explaining. Let's get back to hold up. Shit. Display one. There we go. Include this. Do you guys have any other questions on structure, on change characters, or can you guys map it out?
I personally don't have. I have our questions that are pretty much more advanced.
More advanced. You can answer. I mean, you can ask it, and then I'll just cut the clip out.
Basically, how do you know the price will come to your POI? Or how do you know your POI is basically valid? I mean, not valid, but
how do I
mean,
wait?
you should not...
So your question is, how do I determine a valid POI? Yeah.
No. Not about the valid, but let me rethink the question. How do you know that the POI that you marked out,
yeah,
the price is gonna come to that POI, and is that gonna just melt down or just go up and just ignore a POI.
Okay.
And how to avoid basically being the inducement.
Okay. So to trade Forex or basically anything that has a lot of volume or liquidity, so this is what you want to get by: structure, supply and demand, liquidity, and then the last one is confirmations. So I know that
Okay.
you guys would probably understand structure, supply and demand, and liquidity, but what exactly is confirmation? Yeah. So for Forex, this is the standard idea. For indices, it would be Orderflow, S&D, and then S&D, non-liquidity, confirm. This is how you trade like US 30 or US 500 or something like that. But that's for another lesson, another topic. So this is the general idea of Forex, right? The structure, S&D, liquidity, confirmation. So let's say, let me draw this out. So let's say our general structure is bullish, right? We have break structure here, break structure here, right? Now we know that okay, what's the trend? We're an uptrend, right? Structure is bullish. Now we need to mark up the supply and demand zones, right?
Yeah. And you choose a random one, or not random, but you choose a good one.
You choose like, okay, this is a break structure, right? Where is the down candle?
Yeah.
Where's the first down candle before the up move? Alright, we have this, right? We have that candle, right? That's the break structure. So that's a valid POI. It doesn't have to tap, yeah. And then there's a new break structure here, right? New break structure. What happened here? There's a break structure and it left out the smallest, the lowest move, which is this down move, yeah. And then price taps in, which pushes the brakes. Yeah, basically, yeah. Nah, that's just the supply and demand. I haven't got to confirm yet. I haven't got to confirm yet. But the general idea is the break structure, right? And then you have this supply and demand zone here. Yeah? So break structure, supply and demand. Break structure, demand. So the same as here. Break structure, demand. Yeah? Let's say it gets filled. Break structure, right here, and then demand zone here. Alright, let's say that's get filled. Now, have you guys learned failed break structures or fake break structures?
I haven't looked at that.
So
maybe others.
I can literally explain why these failed if you understand failed break structures and why I wouldn't take these. But let's just get back to like the general idea. Let's say this happens, yeah?
Yeah.
Hold on. So the general idea of a supply and demand zone is that there's a breaker structure and then there's a demand zone, yeah, which is the lowest point, the lowest black candle, the lowest down move, yeah. That whole candle is a valid demand zone. Same as here. This is a break structure, and then the lowest candle, like the candle that went down the lowest, creates a demand. So it's like this break structure and the lowest, which is this black candle, yeah. We marked out the whole thing out. Same as here. This break structure, and this is the black candle that the lowest, which was the lowest move here. So that's the demand zone. So for here, that's what we did.
All right.
Now we need to move on to liquidity. So the general idea is that this would happen. This is a break structure, yeah. This break structure created this demand zone right here, right? But this break structure never mitigated this demand zone here, making this whole zone liquidity because it never tapped into this point of interest. So let's mark that out. Demand. If price came down here, then this is a valid breaker structure. But because it failed to mitigate this demand, let's say going up here, then this demand is super valid because of this whole zone here, this whole structural break, you know, this I forgot what it's called, but this whole section here, yeah, it failed to mitigate this demand, making this whole thing liquidity. So you mark that out as liquidity or inducement, right? And because this is where all the early buyers and sellers are getting in the market, and it creates another structural break, we know that price will just come down here, and then after that, bounce back up. So that's where liquidity comes in with all those fake failed breaker structures. Do you guys understand that?
Personally, yeah, but I don't know about others. I mean, it makes sense.
Yeah, it makes sense.
So,
But what if it continues
so if it continues, right?
and didn't mitigate?
Okay, so let's say this happens, right? This continues. Let's say this continues. This is literally how I trade. This continues, comes up, and then let's say it mitigates this demand, but doesn't mitigate this, and continues a high break, right? If we see this happen, right? Now, I'm gonna forget about everything here. Everything here, I'm gonna blank out. I'm gonna say, you know what? It's not valid anymore. It doesn't matter. Now we forget about that, right? And we just worry about this. Because it already mitigated, right? And then it creates another demand zone. Let's say here. Let's say on there. Hold up. Oh, why's the color like that? I don't like it. Okay. After that happens,
You can watch the other one.
yeah. So if this happens, right? We want to see this happen again, and then break structure again. Yeah. So we have break structure here, and then a break structure here. But because this whole zone is the new liquidity. Yeah. So break structure, mitigate demand, another break structure, and then another break structure. But it left this whole zone unmitigated. So then the price will come back, sweep this low, and then continue up. Whereas a lot of smart money traders, right? They're thinking that this is a change character. This is what they're thinking. They're thinking, oh look, a change character here, and a change character here. Yeah, and then now they're looking for shorts here, and then they get stopped out. Whereas we knew that this was all liquidity, so we took the long. That's
simple.
That's structure, S&D liquidity. But now we need to get to the confirm, which is the part where hold on, I'm reading the messages. Yeah, I guess repeat failed break structures, please. Wait, did you understand the failed break structure yet, or? Haven?
Ogle has to understand, but he's muted. Poor guy.
Oh, okay. Okay. I'll redo it. So. Wait. Have you learned a structure like basic structure like that? Okay. So.
Me?
No, not you.
Oh.
I'm asking the people. Alright. So. This is. Okay. I'll try making this the easier to explain. So. You know that this is a break structure, right? Break structure here. Structure here. Break structure here. And then let's say break structure here, right? Now you guys know that's a break structure. And then generally when there's a break structure, right? It leaves demand zones. Yeah, demand zones here, demand zones here, and demand zones here, right? But before it does that, price normally goes into this demand zone, yeah, and then it forms a new demand zone here. Yeah. So after this gets mitigated, you make a new one. What you don't want to do is see this mitigation and then just line it up and then wait for another mitigation, like that. Yeah, and then go up. That could work, but that's because price is actually reacting off the new demand zone here. So that's how break structures work. After a break structure, it leaves a demand zone. Break structure leaves a demand zone. Break structure leaves a demand zone here. Right? That's the general idea of a break structure plus demand. They always get mitigated. So you guys understand that? So text in Forex trading ideas if you understand that. Just say yes. Okay. Havens, yes.
Okay.
Yep. Okay.
We also can make it if no one talks, we understand it.
Okay. So In order for break structure to be valid, it needs to mitigate the demand zone. Yeah, mitigation means touches in, taps in. But if price does this and doesn't tap into this demand zone, yeah, then this is sorry. If price doesn't come into this demand zone, right? It just misses it, and then it breaks structure again, creating another breaker structure, right? Everything here is just liquidity. So this is just a failed or fake breaker structure. We can call it FBOS because it never mitigated the demand zone and it created a new high. So when that happens, yeah, price will come back down to the demand zone because we know that this is inducement or liquidity, market as X, and then we take a longs here. Do you guys understand that? Or do you want me to give a different example?
I understand that, but I always had this constant, of not missing out and just, taking the fake breakout structure that you marked out as a
Yeah,
real breakout structure.
that's just called FOMO, like fear of missing out, because you want to get into the trade because you're seeing that, oh, you know what, like price is breaking structure, this and that. That's why a lot of people, like, they don't keep their funded, they lose. That's why 99% of traders lose. But do you guys understand this failed break structure? Like how it's all liquidity?
I personally, understood.
Okay. So this is structure. Oh, what is shit? Okay. So I showed you guys 1, structure, 2, supply and demand, 3, liquidity. Yeah. I showed you guys how to use all that into a trade, yeah? So structure, break structure, break structure, break structure, supply and demand, this demand zone here. And then liquidity, which is this fake break structure. We have those inducement here. Yeah. Structure, S&D, liquidity. Now, the fourth one is confirm. So confirm is what exactly happened here. Why did we take this trade? What happened here? Yeah. So you want to go to the 15 minutes or sorry, if we're trading this on the 15 minutes, we want to go down to the 1 minute or the 15 seconds. Personally, I use the 15 seconds because it's the confirm I use. But let's say we're going to this demand, right? Let's say this whole thing is demand. This whole thing is this demand zone. This block here I drew is this demand zone, right? And price is doing its thing, blah blah blah. I want to show you guys what happened in here. I want to show you guys what's happening here, right? So why did we take this trade? What's happening here? Now the confirm is what's happening here. What price is doing is so you see how the, like, do you guys see how, like, there's a down move here? Yeah. On the 1 minute, it's just like bearish as fuck. Yeah. Like on the 1 minute, you guys understand that this is all bearish on the 1 minute. Yeah. So on the let's say 15 seconds too. On 15 seconds, we're seeing like structural doing this into this demand zone, right? Yeah. And then when this mitigation happened, it created the high here. Yeah. It created a chalk. Let's say here. See how there's a chalk here. There's a break structure here. This is a break structure. And then it created another break structure to the upside, wiping it out to make a chalk. When this chalk happened, it left a little demand zone here, right? And then when this demand zone happened, what price does is it just comes back to this demand zone, and then you just take the long. Yeah, like I would wait for the rejection candle, and then I'll just go long. Have my stop loss at this protected low. That's the confirm I use for these things. So it's basically structure. Yeah, exactly what I showed you. Like, you're basically trading this, but on the lower time frame, inside the demand zone. So you're just looking for a chalk flip on the 15 seconds within the 15-minute demand zone. That's what you use for confirmations. Do you guys understand that? Or
Yeah.
Yeah.
But the
Do
problem
you
is
also
that,
use?
wait,
Oh,
sorry?
yeah, you can speak.
sorry, just as you mentioned, you were the first one.
Oh, okay. So, do you always also use 4 pip stop loss fixed?
No, oh no, I actually use 2.
2? Oh.
Yeah.
Because when I do a 4 pip stop loss every time on seconds, the demand is right or supply, but I always get tagged in and then it goes to the direction. Maybe it's the I have the problem I'm entering too late or too early.
Wait, what do you?
Like on the seconds change of character.
Oh, okay, so
When I have a second like this, yeah, I see this on MT4
yeah.
and I'm entering right after the break of structure to the upside, like the upper change.
Wait, so
Like
you're telling me that you're entering, you're basically entering here, yeah? Like this
yeah,
change of character,
yeah,
and
yeah.
then you have a post-it full pip stop loss.
Then yeah,
So
exactly.
what that is called FOMO. You have FOMO, yeah. Whenever there's a up move here, just wait for price to come back down to a demand zone. Like that's what I showed you here. Like wait for price to come down to a demand zone, right? On every single time frame, it's the same thing. You wait on the 15 seconds, it will come back to down to the demand zone. It always comes back.
Oh.
If it doesn't come back, you miss the trade, and that's fine. You know, we don't always have to take the trade. Nothing is a 100% guaranteed. It's better to miss out on trade than to actually lose the trade, because what I
Yeah,
do
that's right.
is I take the trade here, right? I'm patient, right? I know that a lot of people, a lot of retail traders, they're using breakout strategy. They're looking for breakout trades here, and they're going long, and then they get stopped out right here, right? The 4 pip stop loss is right around here. They get stopped out, and what do? I enter the market, and with my stop loss, just like 1 pip above the 1 pip below the protected low, because the spreads, commission, all that stuff. Yeah. So I just have 1 pip below. So generally it would be like 1 pip, like so one. I would enter at the high here, yeah, because spreads sometimes won't take you in, and then I have the stop loss just 1 pip below the zone, and this would be like 2 pips.
Alright.
Yeah, but it depends on your profit, because if I was going with E8 or my Forex funds or true Forex funds, then I would use 4 pips because the spreads are incredibly high.
Okay, FTMO is better, therefore.
Yeah, FTMO is better, but the only reason why people don't go for FTMO is because it's quite expensive.
Okay.
Yeah. Alright, so
it's okay, I think.
yeah.
It's okay.
So Haven says, Eddie, do you wait for rejection candles to close or moment it starts rejecting? Okay, so to close as in taking profits? Is that what you mean? Like when I close my trade, I talking about like taking profits or close as in then you enter. No. Oh yeah. So if I see the rejection, I check the trade. But because sometimes price can do this, yeah. If price does this, and then like starts moving around a bit here, I'm not making the trade, because I know that it's building liquidity here now. But if price just comes down here, you know, wait, it, let me just get rid of this stuff. So how I trade is, I want to see this. This is how I know a zone is more valid. Price comes down here, misses the demand zone, break structure again. Yeah, so now we know that that's a failed break structure or fake break structure. And then now all the breakout traders are right here. They're gonna take longs there. But because there's inducement here, right? I know that this zone is more valid. I'll come down here. Once it rejects, I'll just take the trade. Or price like slowly comes down here and then wicks here. Yeah, and then slowly comes back up. I'll just take the trade. When it starts rejecting, I'll just take the trade. You guys. This is why like you don't want to make limit orders. Limit orders will fuck you over. You just want to set alerts and see what happens. Eddie, look at my markup and feedback. Okay, let's Okay, let's see. Yeah. So you see how you had a break structure here? Alright, you feel this imbalance. Cool. Break structure here. This unmitigated zone was broken, so nothing there is valid. So break structure here. This here is what I would call a failed break structure, because it's all liquidity. It didn't tap into the zone, and you even marked those liquidity here. Yeah. So why would you take a trade here? Like I don't understand. Like, yeah, you made money, but it wasn't as valid because it didn't make sense. Do you get me? Like, you made money, but it didn't make sense on why you took the trade. Did you get stopped out, or did you did you win the trade? Yeah, you won it. Yeah, yeah. I don't know how you won it, because then if something like this, right? I wouldn't take a trade because price didn't come back into this supply zone. So everything here to me is just liquidity. Because we can just see price come back up here, mitigate this, and then go back down. Because if you backtest this on another trade, yeah, you literally just get stopped out. Once you mark out liquidity, this is a break structure. Everything here is just liquidity because price hasn't mitigated yet. Now, if this would be valid if price break structure here, and then mitigates this, right, which is like not valid yet. But if price makes another low, then okay, that's when it's valid. That's when you look for another zone to short, and then this over here is like not valid anymore. Yeah, the high zone is more valid because of the liquidity build-up.
Oh, because I'm noting down right now, and I think I missed some before
yeah,
I was here.
I'll try uploading it, and
Yeah.
I'll send you guys a link. But I wanna,
Okay.
yeah, I'll have to edit it first just to get like
Yeah,
yeah.
no problem, no problem.
Yeah, that's fine.
I mean, I got important stuff.
Yeah, that's fine. Do you guys have any other questions, or you want me to get through anything?
You're barely looking at 50 minutes, and I mean, what's up with the 4 hour?
But what do you mean?
Like structure on 4 hour is it's superior, right? But I mean, can I go to 4 hour?
Okay, let's look at 4 hours. So looking at 4 hours, I don't really care about like what's happening in 4 hours. I just mark out the key zones, and then we're seeing what's reacting off what, and then um we trade off the 1 minute. But on the 4 hours, let's see what's reacting off what. So we all know that this is a weak supply zone, yeah. This is a weak supply zone because there's so many supply zones, so this is all liquidity, right? So we all know that this is a weak supply zone, but when price comes back to this supply zone, I will still look for shorts. Like we can look for shorts here. We can catch like an easy 1 to 30R, but we wouldn't target this low here. We're just trading the order flow. Yeah. So we take a short here, but we wouldn't target this. We'll just target like this low here or this low here. Wait, I think I said this in the first 10 minutes of recording. I'll edit and put it in there. But after any the supply reaction, we can still look for shorts. So let's look at here. This supply zone. Alright, it's missing. It's inducing. So I think it's reacting off this one. This unmitigated. Yeah, we could have looked for shorts here as well. But it's not like we're not chasing all the way down. We're just like looking for little pullbacks because price overall is bullish. Yeah, I want to be realistic. I don't think I'm trading today. I don't like this price action. No more questions? Is that all for today's masterclass?
When are you doing it again?
I'll probably I haven't slept yet. It's 8 a.m. over here, and I haven't slept yet. So yeah, when I wake up, I'll probably hit the gym, and then I'll run another class.
Nice sleep schedule.
Yeah, I fucked my sleep.
I mean, okay, it's 10 p.m. right now.
Ask. No, when you wake up is when I'll wake up too. When you sleep is when I'll sleep. Yeah. Alright. Have a good night or morning, everyone. Stay safe. I'm gonna dip.
Yeah, thank you.
No problems.
You
Bye, guys.
have a good night too, man. Bye.
Yeah, you too.
Bye, guys.